What's happening, guys? Welcome back to another Sunday Scan. Hope that everyone had a great week and weekend. We have a lot to talk about today. I'm going to run through some market thoughts. Emil is going to join us a little bit later on to share his thoughts and his main watches. So we have a lot of ground to cover throughout this episode, and it's going to be great. So, really over the last couple of weeks, we've seen this big V-shaped recovery in the market. And, we've talked about before, just look to the key driving variables that took us down. And once those reverse, the market tends to follow. So if the main reasons why the market was down was, we had the global tariffs, we had the, trade tensions with China, we had earnings uncertainty with some of the big tech names, and then we had, how would those earnings really impact their capital expenditures for things like NVIDIA and some of the other important market sectors. So we've gotten answers to a lot of those questions so far. They paused the global tariffs. They're working out a trade deal with China. We just had the big tech earnings, and they were all pretty good. And they all reaffirmed basically capex for NVIDIA. So if the things that were scaring us or the market on the way down have reversed, then it makes sense that the market is kind of following that now. So still in a headline-driven market, not totally out of the woods yet, but it's good to not get too attached to some kind of a bias that, we have to stay in a bear market. We have to, fully recover. We don't exactly know, but what we can do is identify what was moving the market and then just look for those factors to basically, give us a clue of what the market may do next. So that's a couple of market thoughts there. And then I'll get into some other ones later on with Emil. Before we get going, though, there's a Traders for a Cause in Puerto Rico, May 15th. So if you're either local to that area or if you feel like flying into that area, it can be a great event. And you're going to have some really great people there like Sang Lucci and some others. So definitely check that out if you want to go to Puerto Rico. And then the final thing is that we have a new Trader's Journey episode with Bryce Foos. And he's a great trader, prop trader. It focuses on biotech. And so Anthony sat down with him and had a really great conversation. So I encourage everyone to not only like and subscribe, but also, subscribe to the Investors Underground YouTube channel, and you'll get all the video updates from great content like that. So before we get into things with Emil, I'll just give the disclaimer now that everything that we're talking about is not financial advice. It's not buy or sell recommendations. It's all for informational and educational purposes only. So now let's go chat with Emil. Okay, we're happy to have Emil back on Sunday Scan. Emil, welcome back. How are you doing?
Yeah, thanks, man. Thanks for having me. I'm good. I'm, looking forward for next week.
Definitely. And what a roller coaster of a market that we've had. All within, it feels like a month or a month and a half, we've gone from, euphoric highs to, recession, scares to tariff stuff. It's been crazy. And then in the midst of all that, a lot of opportunity, both long and short. And now I feel like we're coming to a part of the cycle where, like the swing trading is really, coming back and leading. And that tends to happen on kind of the backside of like correction. So I figured it was a perfect time to have you back on and want to get your thoughts about, what you're looking at, what's been working in this market for you, and, just get your thoughts on everything that's going on.
Yeah. So, I'm trying to keep an open mind, and usually I'm not going too much against the fence. And by that, I mean, I am always trying to go with the market. And when the market is extended, then trying to have a short in some specific spots. But most of the time, I am, especially in these days with all the tariff news and a lot of external factors that are going to, and they influence the market. I am just looking for the best setups and then try to trade them as good as I can. So, for instance, I think everybody is looking at PLTR. Everybody is expecting, the earnings. And for me, obviously, at these levels are not a good buy, despite the fact that are going to break out. But we shall see if how the news are going to, the earnings are going to be, and how it's going to behave after that. For me personally, this type of setups, I'm going to look for some price exhaustion and trying to short it at some stage. But like I said earlier, I am not looking to be the first in. So I'm expecting to see this pushing in the first part of the trading session or so, and then we shall see if it's going to fail. It also depends how big the gap is going to be. That's another factor I'm looking, and I'm trying to I'm going to try to capitalize on this, but also trying to be patient and not be the first in. And another aspect on all these setups that are similar with Palantir, we have plenty of them, like Duo or Microsoft, that had some sort of a big bounce, and even those that are, I mean, this in these examples we have, a big bounce, but it's above 200 SMA. If you are looking at SPY, it's under 200 SMA. But I think, right now it became a consensus to short against 200 SMA. And I think at this stage that might not work. And maybe are going to push higher. We shall see, obviously, but from this perspective, I'm trying to not get my mind clouded that it's going to stuff there and the market is going to go south. And we have a lot of data that confirms the fact that a lot of institutional investors sold their positions, and right now it's just retailing, but seems the market is just going higher. So like we had in the past with everybody was yelling hard landing and the market was ripping. Now by the time that everybody was comfortable and they said, okay, it's looking even Palantir, when it broke out back in February, and people got so frustrated and started to buy and then pulled back. Might be the case here, who knows. My point is that as long as it's going to be some sort of a setup that offers good risk reward, like in this example with Palantir, then personally I'm good to go with it. And we have plenty of good setups right now from a long perspective that might hold, and there might be some juice in it. But also we have these extended names that might pull back at some stage, but they are not ready yet. So people had to understand the fact that it doesn't mean that if run in the past weeks can go higher. It's just the way the market works. Like if we take for comparison Palantir and Dual, like similar setups went all the way from the lows, and on Friday broke out and close strong. So this is definitely another name I'm going to keep on radar in the next week. But I would really like to see maybe another gap up and then some fails for a short. Also, we have Dash that been a good long, and I even had a piece on it, but sold it. And right now I'm going to see if it's going to break out. Again, I'm not looking to try to find a top, rather wait to see if it's going to fail this breakout, or maybe it's just going to build up and go sideways in the next few weeks and then break above. Same thing goes to Microsoft. If you want, broke out here, again went from under 200 SMA. We shall see if it's going to build up here, or it's going to fail against these levels. This is, Netflix did the same thing in a way or another. It's looking like Dual. It's not a gap, but it's the slow grind higher, and it's moving away from major moving averages. Still, I'm looking for a short here at some stage. I'm not. I mean, this they can go way higher, but from a risk reward perspective, they are not good longs here. The setups are too wide. The stops would be way lower. So I'm going to rather wait some price, some price speed up, and then we shall see if it's going to give a good short opportunity.
Great. Yeah. Lots of great thoughts there. We're going to go over a bunch of great charts, and just on the market thoughts. We talked about this, how when a market correction is happening, it's really helpful to identify why was it happening. What were the 2 or 3 or 4 variables that really mattered? And one of them was like the tariff headlines. Like they put on universal tariffs, and then it was the Chinese fighting. So the escalating trade tensions there, and then it was uncertainty if that was going to spill over into like the Mag 7 earnings. And then, if that was going to spill over into like NVIDIA and the CapEx stuff. And we've gotten answers to almost all of those questions now. So the things that were taking us down, they did a 90-day pause on, the worldwide tariffs. And then, now we're working on Chinese negotiations. So that's taken off. We just had, the big tech earnings, and almost all those earnings, except Apple was a little bit shaky, but all the rest of them were fine. And then they're all spending capex, and that goes into NVIDIA. So the super trend is still somewhat in the background of the market. So you see these like big V-shaped recoveries, but if you look at everything that took us down, if those factors are basically taken off, it's like we just kind of trade back to where they things were before. And so I think that throws a lot of people off guard. And like Emil, like you were saying, people using just like the 200-day average to short against it if the market's pushing up against it, that's one factor, but you have to take that into account with all the other ones. And you can't hang on to a bear bias, or think that we're going to just chop around for years or do whatever. It's like the market can do anything, and just looking at the factors that were driving it down, when those reverse, it's common to see the market reverse with it.
Yeah, absolutely. So there are a lot of good long opportunities, I believe. There are a few charts that I'm keeping an eye on it. For instance, I'm looking at Spot. They had a very nice breakout on Friday, and this is pretty compact setup. So this one actually might have some legs in the next few days at least. I'm also looking at SOUN. I like this one. Maybe the sector is going to heat up, and it's a little bit loose right now. Needs maybe a few more days, but definitely I like the fact that had a nice run, and now kind of found some sort of support, and it's catching up with all the moving averages. And if it's going to manage to break the flag, I am going to be taking along here these type of setups that have a run and then make a major pullback and consolidate. They usually give good risk reward from long perspective. Also looking at quantum names, that seems that they are heating up with IONQ. This one already been bouncing, but if we are looking at RGTI, which is looking much better, going sideways, broke out on Friday, or QBTS, this is maybe one that's it's looking even better. So if the sector is going to heat up, these are the names I'm going to pay attention at. And I like the fact that after each dip, they consolidated and gave time to catch up with these moving averages. And again, looking for some sort of a push and to sell into. Also, TAGR, again, same thing here, consolidated in a way, and this is mostly going with China names, and we've seen BABA that had a nice sideways action for a few days, and then on Friday broke out. Maybe on the 30-minute chart we can see it better. So this for me are good signs, and these are the setups I want to pay attention at, because they give the best risk reward, even in a case that they are not going to work. In these particular cases, the risk is minimal. And if the market continues to go upwards in the next weeks, then probably these are the best candidates to have some follow through with a minimal drawdown if they don't. So these mostly are the setups I'm paying attention in the next week. And I already have position in some of them, and in others I don't. But I'm looking forward to see if they are going to be able, to offer a proper risk reward. Another name I'm watching, which oh yeah, here it is. It's Bull. That's a SPAC name that had a huge run and had a bounce on Friday. So we shall see how we are going to open on Monday, but I'm leaning towards having a long trade here. Obviously, if the setup is going to be there, I would prefer to see some sort of a gap up and then dips and a consolidation in order to be able to take a position here. But this is a pure technical trade. These type of trades have nothing to do in common with whatever the big caps are going to do. So it's more speculative, and people have to be aware of that when they trade this type of setup. But again, the setups are there, and if the risk reward is good, I think it doesn't matter what you are going to trade. Doesn't matter if you're trading, common stocks or futures, or there are many guys out there that spread themselves pretty much all across the board, and everything usually works the same. If the risk reward is there for something that you are familiar with, then you're good to go. So that's why many times I have on my watch list big caps and also small caps. But as a general view, to see what sectors are going to be hot in the near future, then I'm looking obviously at some of the big caps, which are leading indicators where the money are flowing.
Yeah, absolutely. Great watches there. I'll pull up my screen, and then feel free to jump in anytime if you have thoughts, Emil. I'm just going to run through a couple of things here. So the first thing, the SPY chart. So I think that we could be, coming up testing these 580 levels. And, I've talked about this before where, you look at like kind of the macro picture, you try to piece things together, and then you look for, what trend is in place, but then also when do things become vulnerable? And this relationship between, the SPY and the VIX, we've talked about how in, market corrections or in more volatile settings, one thing that's really helpful for me is that once the VIX really reverts back down to a more broad trend line, the market becomes more vulnerable to flushes. That doesn't mean that flushes are bound to happen. It doesn't mean that, we can't keep trending higher. It doesn't mean that we're not in like a new bull cycle. What it does mean is that, we're still in a volatile headline market, and the lower the VIX goes, the better the flushes will be in SPY if a bad headline does come. So, just think of VIX as kind of a proxy for how hedged are people. And if, people get more comfortable, the market goes up, hedges go down. If a bad headline does come out, that means that SPY can flush much greater than it did before. So it's not to say to expect that. It's to be aware that if we do have a kind of bad headline from left field, we are much more, we can have much more range to the downside than we could when, the VIX was a lot higher and people were a little bit prepared for that. So I just wanted to throw that out there. Like Emil said, I'm also watching Palantir earnings on Monday. And, we've seen this was really a leader. It had relative strength during most of the correction. It was one of the first to kind of, base and break out. It's testing new highs. And, this is a common one for people to kind of bash due to like the valuation, everything like that. And of course that, over, the long term that plays into account. But it's really, what are people buying? What are people pouring money into? And as long as that is in place, then it's no surprise that this is a leader. So I think that it'll most likely have good earnings. Earnings are always kind of a crapshoot, but I think we could have some kind of blow off move, clear out above these highs, and then maybe I might be looking for some kind of a sit back as that consolidates afterwards. But again, like Emil was saying, you have charts like Dual and some of these other ones that they just gap through and continue. So it's more looking for when the turn comes, if it's going to consolidate. And that doesn't mean that the trend's done. With all good trends, it's really just a process of something in motion, higher highs, higher lows. It speeds up, it blows off, it sits back, consolidates, and goes for the next leg. So it really just depends on, are you looking to maybe swing it, and if so, waiting for those pullbacks against moving averages for an entry, or if you're looking for like that parabolic blow off and fade back, then you're looking for it to speed up and then to stop going up eventually. JP Morgan. So we talked about how when markets are volatile or recession fears come into play, financials can be one of the hardest hit, and we saw those really plummeted as the market was experiencing all those things. But again, if all those factors reverse and no recession is as likely as it was before, then financials were strong before, and that can go right back to leading to the highs. So JP Morgan's breaking out of these bases, and a lot of times names like this are good for options if you're going long calls or things like that, because they usually have a lower implied volatility and they can still trend very well. So JP Morgan will be on watch for me. To the upside, HTZ, we saw this one a couple of weeks ago. Bill Ackman position, nice blow off there, and then really it's just kind of lost interest and starting to quietly fade back down. So this already had a nice move to the downside. It's testing these levels. You can see the wicks above. That's a sign that there's some supply there. So unless Bill Ackman has any more tweets, I think that this could revert back to more, some of these other levels. So could be on watch for some downside into the mid fives. Tesla, nice chart building here. So, not very good earnings, but still doing fairly well after Elon announced that he's going to be stepping back from the Doge stuff and then he's focusing more on the company. I think that that's a good tell in this market too, that even if it had bad earnings, it's still, basing and it's still looking like it's trying to break out. So that's a tell right there that the market's not just focused on valuations, not just focused on earnings. There's other things in play. And, usually the more bullish the environment is becoming, the less important, things like earnings or fundamentals become. So that's just a good kind of bellwether for the market in general. And so I think that, if we could base above these 290s, like the mid area there, you could potentially have, the next move up as long as the market stays bid. Apple was one of the weaker earnings ones. They got a little bit hit from the tariff side. Not huge amounts by any means, but definitely the laggard of the Mag 7 names. So if the market were to turn down at all, or we get another negative headline that kind of derails the bull thesis, I think Apple will be the weakest link of the Mag 7 names. So that will be on watch for potential downside if we get a bad headline. NVIDIA starting to break out of a large kind of downtrend. And you can see, I've done a video on this before, how, with very large names like this, if you were to draw, very broad downtrend lines like this, once that breaks, you can kind of draw trend lines from the lows to the new trend here. And so if you kind of, look at an X down there and up there, this tends to be an area where a new trend, possibly on the bullish side, is forming. And then you're looking for, basically good news or other things, and then higher highs and higher lows. So that's kind of a key area around there. Gold is on watch. It's been on watch. I had some good trades on it about 2 weeks ago, and then it's kind of just been choppy. I think that we have the upcoming Federal Reserve meeting. They're going to make some decisions on interest rates this week, and I think that will have an impact on gold. So I don't want to force a bearish bias or anything, but I think that we could mean revert back down if the Fed says one thing that impacts gold. So that'll be on watch. CEP, this was a big one from last week. This was the kind of SPAC thing. It has to do with Bitcoin. It has Lutnick involvement. So I had a lot of confluence of factors going together. We had some great long trades on this, kind of expecting the squeeze, and then after the blow off, now looking for potential mean reversion. But if Bitcoin stays strong, this seems like a name that could just kind of stay trappy. And as long as it's kind of holding these levels, like the 40 level or so, you could have it trap into there and then maybe clear out some of these highs, or at least retest them again. And then the last thing I really had on watch, not so much a specific trade setup, but more just keep an eye on oil. And you can see how oil's really done, and some of these names like Exxon, they've held up okay, but some of the other names like Oxy, you can see, it's been a real downtrend in some of those names. So just good to keep an eye on, which commodities, which big trends are playing out. And I think with oil, it's not so much a recession fear. I think it's more just oversupply. As the oil market's been good for a couple of years, what happens in cyclical businesses like that is that the producers, they're making good money, so they increase production to make more money. And then as they increase more production, there's more supply in the market, and that takes down price. And that's why you eventually have these big cycles in commodities, because the cure for high prices is high prices, because that leads to oversupply, and then that leads to low prices, and then eventually over the next year or two they can cut supply, and then that's how you have those big back and forth. So that was a lot, but I just want to share a couple of thoughts on there. Bouncing all around the market, we have tech names, market names, VIX stuff, commodities, and lots of setups coming up for this week. So any comments or thoughts on any of those, Emil?
Yeah, no, like I said, I'm trying to keep an open mind into next week's. And for me, at this stage, with all these external factors that might influence the market, and as we can see, we have plenty of them, starting with tariffs and ending with fake news that are moving the prices. I'm going with technical setups, and if there is any tight range or any narrow setup that can offer a good risk reward from a long perspective, like we've talked about a few of them. Tesla is one of them, because you went over it, and then, like I said, like I don't know, QBT, or CART, or even BROS, things that trying to have a narrow range for a breakout. I have no problem trading those, especially, like I said, as long as the market is going to stay fit and might push forward. Then for another side of the spectrum, if there are any extended charts like PLTR, Netflix, Dual, if at any given stage there is going to be a gap up, and then they are going to show some weakness, then definitely I'm going to trade those from a short perspective. So all in all, looking for any good risk reward opportunities, and to be quite honest, there are plenty of them right now out there. It's just a matter of timing, and we shall see if the volume is going to kick in, and then I'm going to try to join the trend, basically. And as long as it's going to last, if consensus is going to be right and we are going to reject 200 SMA, then be it. But usually that's the other way around. So with that in mind, I continue to trade the price action and not get stuck, and also not trying to get FinTweet get in my head that it's going to we went up too high, we have to go down. Institutional investors sold, and so on and so forth. So for me personally, price action, it's king, and also risk management, and that's all that is, to be quite honest, these days for me.
Yeah, and you know what? That's a great piece of advice, and I've gotten that piece of advice before, of kind of like ignoring like the FinTwit kind of stuff. And one thing that really helped like solidify that idea is that the people with a lot of opinions, usually on Twitter, they're usually not the institutional people moving the markets. And so you could have 100 different people post 100 different opinions and everything like that, but at the end of the day, Twitter, the crowd on there for the most part is not responsible for moving billions of dollars into and out of sectors. And so just keep that in mind too. Like Ariel says, focus on what the institutions are doing, the big money. If you look at the Pareto principle of like the 80-20 rule, focus on that 20% group that's moving, or accounting for 80% of the moves. And that's the
Yeah,
the big
absolutely.
institutions, the investment banks and things like that, and then using some broad technical indicators like the 200-day, the 50-day, and other things are very helpful in determining that. So great thoughts there, Emil. Thank you so much for coming on Scan, and I look forward to trading with you and IU in the week ahead.
Yeah, absolutely. Looking forward.
Definitely. All right, take care.
Take care. Bye.
Thank you everyone for watching. If you want to trade live alongside me and other members of the Investors Underground community, then check out investorsunderground.com to see if becoming a member is the right decision for you. They have some of the best technology and a lot of great members there, all looking to help other people improve their trading. And also check out Investors Underground content on YouTube and Twitter. Thank you.